Is this more like a geopolitical risk which crude prices are pricing in? And what if we see a Russia invasion of Ukraine? What happens in that scenario? I mean, will that mark also as a peak or a top for the crude market? Peter, now we can get into yes, no, but a lot of fakes are saying, I don't know about why crude prices have gone higher. Bottom line is, crude prices have gone higher without any demand scenario. Do you think this kind of a risk premium is not going to last, or will it continue?
Well, I think there's a lot of reasons why crude's edged higher, and we're saying edged 40% nearly boom to the upside since mid-December. So over that 2-month period, it's a monstrous move, and here we are now just under 96 for Brent. We've got super backwardation, as we're conscious of. We've got supply underinvestment, which leaves the market vulnerable. So you've got to think of those global themes, plus the Omicron issue seems to be very much dissipating. So from a global demand picture, we've got increasing demand, we've got underinvestment, and we've got a shortfall across many different commodities, from base metals and certainly to the energy sector.
So Peter, what would you advise your clients? Ride the momentum, ride the good times, or it's time to have a reasonable view based on demand and supply. The difference between this geopolitical tension and the other geopolitical tensions are that America is a net exporter, and demand of crude, in a sense, soon will be replaced by EVs.
Well, I think that's yes, and it certainly will be replaced, but I don't think it's going to be immediate, and I think it could be a slower take up than what we anticipate. But the second part of the question is how much risk premium has been built into the price due to the Ukraine situation. So is it $3? Is it $5? Is it $10? And if we do see something materialize as far as any form of rhetoric and rises, and let's just hope there's no kinetic side to this as far as a war, then if that was to materialize, then you'd see crude probably gallop another $10 to $15, $20 a barrel. So I think most traders are realizing that it's been a very good 2 months, and be very conscious because it could whipsaw dramatically if there was to be some form of olive branch extended and peace to be the ultimate, solution.
Peter, good morning. I'm going to put it as crudely as I can. I'm not attempting to pun over here. With Brent, for example, going past $96 a barrel, we've seen global influential brokerage firms talking about, the triple-digit mark not being very far. My question to you is $100 or the $90 to $100. Do you expect this to be the new normal for the rest of this year? And we're only in February.
That's very, very difficult to answer, because what we've seen over that last 2 months is a 40% price spike from 70 to 96. So, we're just shy of 40%. I don't think there would have been an analyst out there that would have thought that we would have had this velocity over the last 60 days to take us to nearly $100 a barrel. No one had foreseen the global situation and into the level of what we've, in that dramatic move to the upside. Will it be the new trading range? That depends on a couple of factors. As Dr. Wu mentioned, if this turns into a full-scale situation between Russia and Ukraine, and certain situations ramp up with Iran and with US, then we could certainly see above 100 as our flat line, and that's where our average will be. But if things become far more manageable, then I would say you'd be probably back to the $80 range. This is the issue that we face at the moment. It's so difficult as far from a price perspective, but all I'll say is this: it's going to be extremely volatile over the next matter of months.